Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Phil Price. Phil is an enrolled agent, which means that he's licensed to represent clients before the Internal Revenue Service. But Phil's real business is the area of administering employment retirement plans for small businesses. And anyway, he's the president of his own company. It's called the Price Company. It's in Fresno, California. And you've been doing that for what, 20 years, I think you said? Or?
23 years.
23 years, all right. Anyway, so Phil's very familiar with retirement plan alternatives, and that's what we're going to talk about today, is retirement plans for closely held businesses. Before we get started, I just want to caution our viewers that this is a very complex area. We've only got a short time, of course, to talk about it, and Phil's been studying this stuff for years. And so just bear that in mind, that this is supposed to be an introduction to a continuing conversation that will be going on, we hope, with you and your advisors. So with that, Phil, let's get started. Okay, so why is retirement planning important for the owner or owners of a closely held business?
Well, I think, as we can all tell today, that you pretty much are going to have to take care of yourself after some of the things that have gone on in the last 2 or 3 years economically. And so Social Security may or may not be there. There's a lot of discussion about that. So you need to take advantage of being in a retirement plan, qualified retirement plan, to save for yourself and provide something for your employees so that they also have a retirement plan.
Right.
It's real important if you wanted to get good employees. It's part of a benefit package to offer to people, is to have a retirement plan. You get tax deductions for it, and you get tax deferred growth. When the money's in there, you're not taxed on it until you take it out.
Right. Okay. Well, what are some of the basic types of retirement plans? And we'd especially like to know some basic information, like what sort of contribution limits apply, basic advantages and disadvantages for different types of plans.
Well, they run the gambit as far as retirement plans offered with the tax deductions through the Internal Revenue Service. There's individual retirement plans, an IRA, and people have probably heard of that. And your limit there is $5,000 that you can put in, and anybody can have an IRA. If you are in a retirement plan, there are some limits as to how much you can deduct.
Right.
Also, they have a newer concepts, and in the last 10 years, you can have a catch-up if you're over 50 of $1,000. So a person could put up to $6,000 in, and the spouse can also put money in.
Right.
Another one is a simplified employee plan. They call them SEPs. It's basically a vehicle in which an employer can put money into an IRA for an employee. Once it is put into that, it is the employee's money. They have a right to everything that's in there. Limits on that, as an individual, can go up to $49,000. The employer can deduct up to 25% of eligible compensation. There's also simple plans. A simple plan is a version of a 401k. Allows people to put money in out of their paycheck up to $11,500, and a catch-up of 50 and over of $2,500. Most of the time, you're going to want to do that as a simple IRA. There's less administration involved. If you were to do a simple 401k, you might as well do a regular 401k because you still have administration to do and you have higher limits.
Okay.
401k plan is a plan in which an employee can put in money out of their own paycheck to save. Many times the employer will match that money. Financial experts you hear talk about, if you do have that, make sure you put in enough to get the full match, whatever that is. Match 25 cents on a dollar, or we match up to 5% of money that you would put in. Again, the limit's $16,500 as an individual. And if you are 50 and over, you can put an additional $5,500 in. So it's a total of $22,000. That's adjusted cost of living. There has not been any cost of living adjustments for
Yeah.
anything in the last 3
Yeah,
years.
3 years, right.
But, they do project, though, from what I've read, that there will be some cost of living adjustments for next year,
Okay.
based on all the cost of living things that the government does.
Okay.
Another part of a 401k plan or a standalone can be a profit sharing plan, and that's one that is funded by the employer. Percentage of pay. It can be used where it's integrated with Social Security. You can also have class allocated plans where you have different employees that get different percentage contributions of their pay.
Mm-hmm.
There's testing that you have to do that's involved with that to make it work right.
Mm-hmm.
And then the classic pension plan that it's called a defined benefit pension plan, but most people wouldn't just recognize it as a pension plan where
Mm-hmm.
you get paid a per month when you retire type of thing. And it was big in all the big national firms and things like that. Now there's less and less of those at the national level, big firms, but it's still very advantageous for someone, especially if they've not had a retirement plan and they're close to retirement. An owner would be able to put away a substantial amount of money if they install one of those towards the end of their retirement, depending on the demographics and the.
So if you have like an older,
employees.
high-earning person, like maybe almost a sole practitioner attorney that's very high level or something like that.
Right.
That might be a good situation. But
Yeah.
part of the problem with these defined benefit plans is just the funding thing, and you have to have you have to be
So you
able
have
to
to make sure you
consistently
fund
chug
it.
the money in.
Right. You need to look. Somebody has to be able to honestly look and say, I know that my business will be generating this much income over the next 5 years, 10 years, and that I will be able to make the contributions because they are mandatory to make. I mean, you can always, I guess, stop the plan along the way, but the idea is that you're going to want to put that money away.
Right. Now, there are some types of plans that you can't combine with other ones. Is that right?
Yes. I mean, you can combine, and in fact, there's a lot out there right now of combination of a 401k and a defined benefit plan, kind of taking advantage of both parts of that. But you cannot combine a plan with the simple I described or a SEP.
Mm-hmm.
That if you have that plan, that's the only plan you can have in that particular case.
Okay.
If you by accident set up a plan, then the simple or SEP is no longer in force.
Okay. How do you go about having a plan put together?
Well, the best thing is you want to sit down with someone who can design a plan for you. They want to look at the demographics of your company,
Mm-hmm.
and I would say come up with 2 or 3 options, which would have probably different numbers involved in that, and then compare the pros and cons. Like we described, a defined benefit plan has the con is you have to fund it. A profit sharing plan, a pro is that you're not required to fund it.
Mm-hmm.
In a particular year. So, so you find out what is going to best work for somebody and what their goals are, and then you write a plan document that accomplishes those goals, or sets up everything to accomplish those goals.
Now, I guess a lot of, especially small business people, but maybe even some of the bigger ones, they're looking to shortcut the process, and so they may get a plan that is offered through one of these, like a brokerage company or something like that. What do you think about that alternative?
Well, the problem is it depends again on, like I said, your demographics and what what kind of business you're in and what kind of other business relationships you have. I know of a company that had a custom plan that was designed for the multitude. They had a multitude of different types of contributions. They worked in government work and some other places, so they had certain requirements for funding retirement plan. And then they switched to a national house who put them on their quote unquote, standard plan or basic plan, and those parts of the plan in the custom plan were no longer in there. And it created a big headache for them in trying to pass their testing, and it's potential that the owners were going to have a lot of money coming back out of their 401k contributions.
Mm-hmm.
Also, I know of doctor group and set up a standard plan, Standard plan means everybody's in,
Mm-hmm.
including, unfortunately, in this case, all the other doctors in the group. There were no employees, but now, by setting up that plan, all the doctors legally are supposed to be in your plan. Instead of setting up, if they'd set up a custom plan, it could have been designed so that none of the doctors were in and just the one doctor that was setting up the plan. So creates quite a bit of problem if you put your 49,000 in and you're only going to get about 1/6 of it.
Uh-huh, uh-huh.
So
So anyway, it can pay to have some customization, one, because you can reduce the overall contribution that you have to make while you're getting the benefit that you're seeking.
correct.
And so that's something to think about. I think another thing is your investment choices.
Mhm.
And so when you're dealing with these big wirehouses, I mean, basically you're getting a selection for the most cases of mutual funds that are their mutual funds.
Correct.
And those may not be the ones that you want to choose. I know when I had that type of a situation, I had a very difficult time selecting, really investments that I felt, that I could put together a good portfolio with.
Correct. I mean, you have to understand, if they're going to give you a document, they're going to want you to have their investments stay with them and not be in anything outside of what they deem to be their family of investments and that type of thing.
I mean, really, that's how they're getting paid for doing it, is that they're getting a back end commission or whatever, from the investments that you're making. And so that's how they can justify, offering this to people. And what makes it a great thing for them is, they're looking to just place investments. And
correct.
And so again, that's where most of their income is coming from, as opposed to like maybe if you're working with a fee-only financial planner or something like that. There you're going to have a fee that's stated, and a little maybe more upfront.
Right. Well, right. That's why you'd want to have, a more custom plan that allows you to invest in whatever the government allows you to invest in a variety of different investments.
Right.
And you're not necessarily tied to one particular place or not.
In fact, I mean, you even have alternative investments that can be available with a
Mm-hmm.
custom plan.
Yes.
So
Yes.
you could invest in real estate, you could invest in private money mortgages.
Limited partnerships, different types of things.
Yeah. So, I mean, there are other issues related to that, but
Yes.
these choices are there. So
Yes.
it's just something to be aware of when you're making these decisions and about how you're going to go about doing this.
Correct.
Anyway, and should you be going to a stockbroker for advice on how to set up a retirement plan? Does that really make sense?
Well, I guess I'm opinionated.
Yeah.
I don't
don't
handle investments
Yeah,
or try to and tell anybody how to do investing, because that's not what I do. I just deal with the administration of the plan design. So I just everybody has their field of expertise, and you want to try to find that you're talking to the person with an expertise in that particular field, and basically work together as a team. I mean, really, in doing this, you work together with an accountant, with the investment people, and you work together as a team to accomplish the goals that the client has.
Right. Okay. Well, time.